How are you seeing this sell-off as it relates to expectations for what the economy is going to go through here?
Well, let's face it, moving into this crisis, Sarah, market values in many corners of the asset market were inflated. I think we're not fully supported by fundamentals and had been fueled in part by the levitation of the Federal Reserve and other central banks. So I think that it was inevitable that some factor would come along and catalyze a correction here, and this has been the factor. The question now is how to stabilize market confidence as well as deal with some of these very difficult supply chain and related issues.
How do you do that when this is such a moving target with so many unknowns?
Well, I think there is a growing need for coordinated action. And I think it has to be coordinated across the major central banks, but not just the central banks, Sarah. I think across the major governments. Let's take an area like healthcare policy. I'm not sure at all that consumers around the world have built confidence in the WHO's leadership in this respect. What about creating a war room in Atlanta beside the CDC where healthcare officials from the U.S., Japan, Europe, and China will come together and promise to share real-time information and coordinate policies on the ground there? It seems to me that something like that is needed. Beyond that, however, I think that there is a real opportunity and a need here for the U.S. and China to show global leadership. If my good friend and your former colleague Larry Kudlow is listening, why not immediately, within a matter of days, roll back all of the tariffs that have been raised during the trade war? The tariffs, even as they stand today, after some of the pullbacks, are still well above where they were 2 years ago. Both sides need to say, what can we do to provide a jolt of confidence to the markets? Now, this is not going to correct a lot of the supply chain problems.
Not even close, right?
But it will send a powerful signal to the market that the two leading economies of the world are working together in an extraordinary time to find some ease of market pressures.
But Charles, even as we speak here, there are certain parts of the global economy far outside of China right now that are being paralyzed as a result of people are just not doing things. And business is not getting done. I mean, Nestle has banned all travel for 300,000 employees. Now, not all of them are getting on planes all the time, but it's so difficult, it would seem, to have any sense as to what the real economic impact is going to be of this fear of the virus.
You're right, David, but don't underestimate the potential of coordinated action. I would say your point and what Sarah was talking about earlier underscores the need for a serious look at some coordinated fiscal policies. What country is better positioned in the whole world to join China today with fiscal stimulus? It's Germany. An 8% current account surplus, strong fiscal position, and Europe now is facing its own supply chain problems. That is very clear. The Lombardy region, sixth largest region in Europe, is now under tremendous pressure. I think we need to think about coordinated fiscal policy as well as, yes, perhaps some coordinated monetary policy, but let's keep in mind that further interest rate reductions in Europe are going to put further pressure on the banks there. There will need to be some special programs to take off some of the burden of bad loans off the balance sheet of the banks here if this continues for some time, because we're going to see this accumulate.
What you say makes a ton of sense, except the world is moving in the other direction. Not coordinated policies, but they're moving toward their own policies and putting up borders and travel restrictions and dealing with their own problems away from international institutions. Isn't that more the trend?
Well, it is, Sarah. But, you know, some coordination doesn't take getting on airplanes. The fact is, look back at what happened in April of 2009. It wasn't central bank coordination that shocked the markets back into
G20.
It was the G20 and the multitude of measures they took at the time. The same with the Plaza Accord 35 years ago. It was the coordination across a range of policies. Doesn't require you to get on an airplane. Obviously, no one's going to do that now.
I guess the question would be how much institutional erosion has there been because of trade tensions, geopolitical tensions, the way we've approached NATO, G20, WTO, China. How much of that can be repaired? Or does it need to be repaired?
Well, that's a good question. But, you know, this is an opportunity for repair, in my view, Carl. You know, the U.S. has got to recognize at some point here that allies are critical. We can't fight this coronavirus ourselves. It's obvious to that, right? So this is a great opportunity to show that despite all the tensions that have grown, despite the strategic rivalry, the U.S. and China can find common ground to work together. And we need to do it, obviously, with Japan and Europe as well. I think unless they seize the opportunity here, we're going to be getting closer and closer, not just to a China weak spot, which is already upon us, but to a global recession.
How do you think Powell's going to react?
Tough question, tough question. You know, he's obviously sitting there thinking, but let's think about it. I mean, the next FOMC is almost 3 weeks away, Sarah. That's too far out. It's why, again, I would call...
3 weeks? You can't wait 3 weeks for a cut?
Look at what's happening in the marketplace here, Carl. I think that there are times when central banks and other government officials, and I don't want to put the central banks in the bullseye here, even though that's the tendency we all have, because I really think that they've done so much already. There's not much ammunition in the powder room at this point for them. I think the fact is that they do need to look at coordinated action, and it would have a greater effect if they step out beyond their own rhythms.
What action? Cuts? Rate cuts?
Well, you could consider rate cuts, but another action would be one unified statement that they will all take necessary measures to inject liquidity in the markets and support their financial system according to their own circumstances. Now, that may sound a bit too nuanced, but the fact is everyone is in a slightly different situation.